When you're helping borrowers, do you just focus on just like a single family homes and small multifamily, or do you help borrowers buy bigger property?
My last 8-unit was in Tampa, and we closed that in 72 hours.
Wait a minute. I'm sorry. I'm sorry. Back up a step. Did you say you closed the deal in 72 hours?
I introduced it to my capital partner on Thursday, and we funded on Monday.
How are you able to do that so fast?
So that is relationships.
That is relationships, ladies and gentlemen.
I was like, hey, I have a deal for you. Can you take a look at it? She took it right into the boardroom for me. They were like, yeah, this one looks really great. I think the borrower brought $4,000 to the table.
$4,000?
$4,000.
That's it?
Yeah.
Their closing costs?
Their closing
basically,
costs.
To buy 8-unit.
It was really my advisory fee, but yeah.
Your lender's not doing deals like this. Not in 72 hours. Welcome to another episode of the Co-Living Investing Podcast. I am your host, Ashley Jeffers, and on this episode, we have a very special guest, one that I have been looking forward to, been trying to get her on the podcast for a month now, Shukira Maldonado. Welcome to the show.
Thank you for having me, Ashley. It's a pleasure.
You're very welcome. I'm glad you are here. We are going to talk about one of the hottest topics in investing in general, but especially in co-living investing, which is where do we get the money from to buy these investments? So I'm glad you're here to share your knowledge. You are what's the best way to describe you as a lender? Hard money lender, or how would you introduce yourself if you were in a room full of people and someone asks, Shukira, what do you do?
Yeah, absolutely. So I'm more of a private lender. I like to think of myself as more creative. So I am able to structure deals that people are normally not able to place.
Okay. Very cool. So in our world of real estate investing, we typically are buying properties that we are holding as rentals, so the buy and hold strategy, or we're doing the fix and flip strategy. In my case, we are more focused on the room rental investing strategy. So before we get to funding and what that looks like, because I know people are curious about that, can you give us an idea of your typical investor when they come to you? What are they typically wanting to invest in, and how do you help them navigate the investing landscape?
When a typical investor comes to me, they're looking for hard money or a DSCR loan or a fix and flip loan.
Let's pause right there. Just for the education for the audience, tell us the difference between a DSCR loan and a hard money loan.
They're kind of the same. Hard money is really geared towards fix and flips. So that's if you are going in and rehabbing a property. Mm-hmm. And then our DSCR loan is going to be for our buy and hold strategies. So that's more for our rentals. Okay. So when we are coming in after the hard money, we're going to go right into a DSCR loan.
Let's take one at a time. So if we're looking at fix and flip, the fix and flip model, I need to borrow some money to buy this house in Charlotte that I saw. It needs $50,000, $60,000 worth of renovation work. I come to you and say, Shukira, I need to borrow some money for this. What are you going to be looking for from me as far as eligibility? Do I have to have a certain amount of money in the bank? Do I have to bring you my last 2 years of tax returns? Is there a down payment requirement? So can you kind of walk us through what a fix and flip project is going to require from the investor to get into working with you to borrow money for that deal?
Absolutely. So we are looking for a credit score of at least 640. I do offer a 100-100 product.
What's a 100-100 product?
So that means I can cover 100% of the purchase and 100% of the rehab. We are looking for 6 months reserves. Okay. But and then also we're just looking for the reserves. When it comes to closing costs, that's going to be about 4 points, some origination cost, and we're good to go there.
Down payment?
That's the down payment.
That is the down payment.
Yeah.
So the closing costs is the only thing you need to bring to the table because, as you just mentioned, you'll cover the cost of the house. Mm-hmm. And so the house is $250,000.
$250,000.
And the cost that your borrower has said, hey, I went and got a contractor and they told me it's probably going to be $60,000 to renovate this house. You'll cover that cost as well?
I will. As long as it does not exceed $500,000, we're
Okay.
doing 100, 100.
100, 100. I like the sound of that. Okay. So how long do the hard money loans typically last? Because we're in an environment, in an economy where the price of materials are going up. It's harder to work with contractors. Like, it's more typical for a contractor to run off with your money than to do the right thing.
Absolutely.
And so when we set out and say, this project is only going to take 3 months, best case scenario if nothing goes wrong. Realistically, that project could take 6 months, 9 months. So can you accommodate if the project goes beyond what the investor projected as far as how long it was going to take to finish the project?
Yeah, absolutely. So with our 100, 100 product, we're already offering at 6 months.
Okay.
So, and then we we can go to extensions, and those extensions are 3 months each, and that is with 1 point.
That's it.
Yeah.
So just a 1 point and you give me
Extension
another
fee.
3 months. That's low.
Yes.
I think, yeah. Because I think typical is like maybe 3%. Somewhere was one between 1 and 3%.
So we're at 1.
And you're at the lowest. Okay. That's amazing. So when and it works, once the house is fixed up, agent puts it on the market, house gets sold. When the house gets sold, that's when you get paid back.
That's correct.
So the goal is
To either sell or you can buy and hold. So if you hold it, now we can go into a DSCR product. And that is if you have a rental. But if you do not, we can lend as long as the appraisal does match the value of the rentals in the area.
Okay.
And it can meet the DSCR requirements.
okay. So let's switch gears a little bit to the DSCR loan. Say I'm not a fix and flip type of investor. It's too scary, too risky. I just want to be able to build a portfolio of rental properties. And so to buy my first or to buy my 10th, I'm going to probably need some support from a lender. And so if I come to you and say, hey, I'm looking at this, this 4 unit quadplex. So walk me through kind of the same way we did the fix and flip. Walk me through the DSCR eligibility and how I would go about, like, what you need from me from an eligibility standpoint to be able to purchase this fourplex.
Absolutely. So that is a little bit more complex than our usual fix and flips because we know that that's usually a longer loan. That's about 30 years. So what we're looking for is about a 680. And then we're also going to be looking for bank statements in your LLC name because I only work with entities or corporations.
Okay.
Also, we're going to look for the strength of the property and how well it ratios when it comes to the DSCR. So we would like to see about 1%. We need that to cover the petty. So the principal, insurance, taxes, and interest.
Okay.
And so when we do that, we're able to loan there. Also, what we're looking for that you own your primary. So we do want you to own your primary.
Okay. So if I'm renting an apartment, then you probably can't work with me?
We can. You probably are going to have a little bit of a larger down payment.
Okay.
So that could be not 75% down, but 75% leverage.
So 25% down.
Yes, instead of the 80%.
Okay. So typically for the DSCR, you're looking for, if I do own my own home, 20% down payment.
If you're new. Now, if you're an experienced investor, we can work with you. We have 85% programs.
What do you consider experience? Someone who's done like 5 to 10 deals?
3 in the last 3.
3 in the last 3 years? And can those deals be fix and flip or buy and hold?
It can. So
Okay.
we do mix and match. And also, if you have someone that you've partnered with and you are on the deed, we can use that as your experience as well.
Okay, that's where I was going next. Because I want people to know that they don't have to feel like they have to navigate this by themselves if they don't have the highest credit score, if they don't have, if they don't own their own primary residence, like you mentioned earlier. They can partner with someone.
Absolutely.
They can bring someone on who has the experience, who has the credit score,
Who has the money in the bank.
who has the money in the bank.
Yeah, so we are able to utilize partnerships in a beautiful way because it allows someone who would normally not be able to get in to come in.
That's amazing. So make sure that if you are interested in purchasing investments, to know that you may not have every single thing that you need. So make sure that you are networking with other investors that have the things that you don't have. That's important. Because Shukira is like pointing out like all of the blocks in your head as to why you think you can't invest. She has a solution for them.
Absolutely.
And partnership is one of those strong solutions to not having certain things that you normally would need if you were to navigate taking on a investment loan by yourself.
Absolutely. And I advocate for our new investors to go in with partnership, especially with someone who is more experienced, because all of those things that you are thinking that could go wrong, they've already done it or experienced it. So you kind of cut that learning curve in half.
Yeah. Yeah. That's amazing. Stronger together. I mean, that may sound cliche, but I'll throw another one out there. It takes a village. So, I talk about teams all the time when it comes to the co-living investing space and making sure you have the right teams around you for that purpose. But to buy property, to work with the lender, you need the right people on your team as well.
You do.
So let's talk about the don'ts. Like you have the things you've seen lenders or borrowers come and go. Mm-hmm. What are the mistakes that you're seeing people make when they come to you and say, hey, I want to borrow money from you to purchase this investment property? Have you seen people making mistakes, or everyone's doing everything right?
It would be beautiful if everyone did everything right. I think not being able to take constructive criticism when it comes to direction. So when especially our new investors, I know that they come in and they're a little nervous and it's their first time and they want to have matters into their own hands, but not really following the lead of people who have been doing this or in the industry for years. It kind of makes it harder. We run into appraisal issues, especially in the co-living space, where we are learning how to navigate those waters. And I had an investor that I love dearly, but she did not listen. And so it did cost us time and a couple $1,000s in the process. With that being said, I think we should be more cognizant when we're being led the right way.
Yeah.
Rather than trying to take matters into our own hands because we're fearful.
Right. It's like going up against the advice of your attorney or your doctor. You wouldn't do that. So ladies and gentlemen, listen to your lender. They are the subject matter expert when it comes to all things money needed to get these investments purchased. And so it's very important to listen to the expert in the room. Yeah. Okay. So you're an investor yourself.
I am.
So you own property in what states?
I'm in Texas right now. So I have a couple of properties in Houston that I co-own with one of my aunts. Okay. And yeah, we've been doing that for a few years. She's really deep in Houston. So she has like 12. I own 3 with her. So it's been really cool.
Cool. Nice. Okay. So you were not coming from the person just behind the desk pushing, numbers, like just calculating numbers and not really having experience. Like you are an experienced investor.
I am.
So you know what your borrowers are up against.
Absolutely. And I have lost too. So I am not one of those that have just sat pretty and been rewarded.
It's all worked out. Right. Yeah. Right.
We had a flip in Salisbury where we lost $25,000.
Ooh.
Yeah.
That's a lot of money.
It was. And it was it took me out of real estate for a couple of years because I was scared.
Oh, yeah.
So I have lost. And I say that with love that, hey, you can build back up. You can steer. And we were just like, yeah, we're going to do this. And it was great. And
things happen. Things happen. That comes with the territory. I have lost as well. I've lost thousands of dollars. But, and I've had friends that have lost thousands of dollars in real estate investing. But it comes with the territory. Every single loss is a learning opportunity. It's a lesson that you learn that you can carry with you into future deals.
Absolutely.
There is nothing wrong with having to take a year off or take 2 years off or however long you need to take off to regain yourself, to get your thoughts back together, to get your emotions back in check because it's emotional. We say it's business. But
real estate is absolutely it's a people's game.
Absolutely.
And, it's one of the most rewarding, but one of the hardest too.
Yeah, I think I think if it was easy, then everybody would do it.
Absolutely.
Right. So it's important to take some L's, take some bumps, but get back to it.
Yes, take them with stride.
Yeah, because there's more rewards, there's more benefits to being an investor than to not being an investor.
I agree.
I think so. Okay, so when we talk about lending for co-living or room rental properties, hot topic right now.
Yes.
Because the room rental investing, the co-living business model is probably the hottest trend in real estate investing right now.
Absolutely.
Just last night, I was teaching on a call, and the question came up, and I've gotten this question so many times, is I'm having a hard time finding a lender that will work with me and lend money to me to purchase a room rental property. And so you are a lender who is few and far in between, because you will lend money for room rental properties. So what are the things that you look for as a lender when it comes to feeling comfortable with lending money for a co-living property?
Absolutely. So I think that I'm really looking for a place that looks like a home.
Okay.
So when we come in and we're in the living room area, does it give that feel?
Mm-hmm.
Am I visiting? Because, okay, albeit you have 7 bedrooms, but can we go and eat in the kitchen? Can we still have a seat and watch some TV? That's what I'm looking for, because how much is it going to cure or cost to cure when it comes to we put it back on the market?
Resale value.
Mm-hmm.
Yeah. Yeah.
What does that look like? And so I think as lenders, that's where we go first, because it is a risk. You may say, hey, I loved this for 3 years and now I don't anymore, so I want to get rid of it, but we still have you in for a 30-year. So if we take it back as the bank, what happens? How can we get it to our next? What if they don't want to do co-living?
Right.
Is it going to cost more to cure than it would to just keep it as is?
Yeah. So I talk to people about this all the time, because as investors, we want to maximize our revenue on every property and fit as many rooms under that roof as possible.
Please don't.
Don't do that. For 2 reasons. What Shukira is talking about is maintaining the integrity of the property, maintaining the integrity of having a living room, of having a place to eat. Doesn't necessarily have to be a dining room, but a kitchen with enough room for there to be a table and 4 chairs where people can still eat in the kitchen area is important. Not only for the room renters there, right? So I've seen people that will take the living room out, that will take the dining room out. You walk in the house and it's nothing but walls.
Yeah.
It looks
that
like
reminds us of a hostel.
Right, or cell block B. So, it's like, would you want to live here? Like, don't turn every single square foot of a property into a room. That is not the best use of that property when it comes to working with a lender or presenting a product to your room renters.
Absolutely.
They want to feel like it's home. So,
and that helps with longevity too.
Right.
Not to overstep, but it helps with longevity for the renter.
Yep.
We hear a lot about that, about how they're turning.
Yeah, and
you can cut that, but that was for you. But yeah,
that was for me.
I know you don't do that, but
no. Yeah, I like to keep the living room intact. Living room, it's like, I'm getting away from putting sofas in, because that invites people to invite their cousin over and spend the night and lay on the couch.
But put a sofa in for your appraisal.
But put a sofa in for your appraisal.
Yeah.
Like stage it for the appraisal.
But you did not. You heard that from your homegirl.
Right.
Your lender.
Right. That part. So outside of that, 2 end chairs in the living room, a little coffee table in between.
Something that gives me a feel that when I come in that it is inviting.
Yeah. Yeah. And keeps people from, because nobody wants to sleep in an end chair. Absolutely. Like nobody wants to sleep in like a very small chair. They prefer a sofa. That's what we're discouraging. But for staging purposes, it's okay. But then get that sofa out of there, because nothing good comes from sofas in co-living properties and living rooms. Anyway, so, okay, we have talked about the different loan products that you offer, buy and holds, fix and flip. We've talked about some eligibility stuff. We've talked about encouraging investors to listen to their lender, right? And so,
or anyone who is pouring into them in investing. It doesn't have to just be me. It could be their mentors, someone who has done it before, so that you can cut that learning curve in half.
Yeah. Yeah. I mean, why would you rely on your own knowledge if you don't have the experience?
Absolutely.
So that's interesting.
Our newer investors, they're new and they're learning and they're ready and willing. They just get a little
ahead of themselves, and I'm sure they're taking YouTube University to heart, and anything they see on YouTube is the truth. But regionally, wherever you're investing, your local boots on the ground like Shukira, like that's the one that you listen to when it comes to what's happening in the market, what type of economy are we in, how do you need to navigate borrowing money to buy property. When you're helping borrowers, do you just focus on just like a single family homes and small multifamily, or do you help borrowers buy bigger property like apartment units? Or I don't know that you go to the commercial space level, or you just stay residential.
My biggest unit that I have helped lend on was an 8-unit.
8-unit?
Yes.
Okay, very cool.
I'm actually facilitating a deal now in Albany that I just was a wholesaler on, oddly enough, and then I'm moving now also lending on it.
Okay.
So it's been really cool. But my last 8-unit was in Tampa, and we closed that in 72 hours.
Wait a minute. I'm sorry. I'm sorry. Back up a step. Did you say you closed the deal in 72 hours?
I introduced it to my capital partner on Thursday, and we funded on Monday.
How are you able to do that so fast?
So that is relationships.
That is relationships, ladies and gentlemen.
They are one of my favorite private money lenders in the United States, but they are only in Florida.
Okay. Okay.
And yeah, we had another deal that we closed and it was really quick. I was like, hey, I have a deal for you. Can you take a look at it? She took it right into the boardroom for me. They were like, yeah, this one looks really great. And the next day, they're like, hey, well, can he sign here? We're still negotiating. We went up. They offered us $840. We at the table were at $871. Negotiated $30,000 extra.
Really?
For them to close.
Wow.
Yeah. I think the borrower brought $4,000 to the table.
$4,000?
$4,000.
That's it.
Yeah.
Their closing costs.
Their closing
basically
costs.
To buy 8-unit.
It was really my advisory fee, but yeah.
Your lender's not doing deals like this. Not in 72 hours.
72 hours. And we have that in North Carolina. We also have that in South Carolina.
Okay.
We offer it in Texas. So I do have different capital partners who are ready to deploy capital.
Okay. So I was going to ask, how many states do you cover?
So I'm in 37 states, but when it comes to our private money, it's very niche.
Okay.
So, or niche. And that's about 10 states.
Okay.
Yeah.
So you work with private money lenders, but you also work with institutional money.
Yes.
Which allows you to go out to the 37 states. Mm-hmm. Okay. Do you do cash out refinances?
Absolutely.
Okay.
And we can go up to 80%.
No.
Yeah.
No, these other lenders out here, they're like, 75% LTV max.
80% LTV max as long as the DSCR is 1.25.
1.25 ratio. Okay. All right. So this works for my folks that are doing the BRRRR strategy.
Yes.
So for those who have not heard of the BRRRR strategy, it is an acronym that is B R R R R. I think I got that right. So buy, renovate, rent, refinance, cash out refinance, repeat. So that's B R R R R, the BRRRR strategy. So this helps investors kind of recycle money. So you get into that first investment deal and you do the things that I just mentioned, and you're able to do the cash out refinance, take the cash out of that property you just stabilized and use that money to purchase your next property.
Absolutely. And I'm going to give you a real world example. So we offer the 100-100 product.
Okay.
And then you go in and you came in with your closing costs, and then we get you rehab, and you go into your 80% cash out refinance.
Amazing. Yeah,
No
when I
brainer.
tell you I brought the best lender on this platform, I know what I was doing, y'all. So we are going to make sure that we have Shukira's contact information in the show notes. We have talked about every challenge that you could face with lending. Shukira has come up with a way for you to work right on around that to get to the investment properties that you're looking for, whether it's fix and flip, buy and hold, whether it's a single family buy and hold or multifamily, and co-living. So she is one of the few lenders out here that understands the underwriting, that understands what we are faced with as room rental investors. And as a lender, she has a product for us to buy room rental investment properties. Amazing. So thank you so much for being on the show.
Thank you for having me.
Really appreciate you being here. We're going to put like I said, we're going to put your information in the show notes, have people reach out, and everyone that uses Shukira, make sure that you come back to the comments, whether you're seeing this on YouTube or you're seeing this on Facebook, whether you see it on, you might be able to leave comments on the podcast platforms. I'm not sure. But my point is, once you experience the excellent service from Shukira, please come back and hit our platforms and share your experience so other people can take advantage of the knowledge and expertise that this woman, amazing, intelligent woman, brings to the table. So thank you for tapping into this episode of the Co-Living Investing Podcast, and we'll see you in the next episode. Peace.